talk to us about your focus on the institutional market. This is why you're offering this sort of insurance. What are the hardest things to try and negotiate with those that are providing the insurance, in particular coming from London, Lloyd's Group in particular? What did have to enter your head to ensure that you can be protected against? Because not everyone thinks, oh, someone's death is going to spark me losing all my millions.
Right. Well, a little bit about Bitgo. We've been focused on this problem for 5 years. We are a trust company. We're actually regulated out of the state of South Dakota, Division of Banking there. And so we started out as a security company, and we've expanded. Building a trust company is about building trust and building safety, things that people can count on so you can have peace of mind about your Bitcoin and digital assets. The latest move for us is to add insurance onto that. This has been a troublesome spot for the industry, getting into the insurance market, because there's been no precedent for it, and because securing it has been elusive. It's been a complex problem, it takes a long time to solve. So they've asked a tremendous number of questions. They look at physical security, they look at our digital security, they look at how we operate things, they look at all of our operating controls, audits, disaster recovery plans, and so forth.
Mike, who are your investors, and do you anticipate a funding round as well?
Well, actually, right now we're doing just fine in terms of funding, but our existing investors include Goldman Sachs, includes DRW, Jump Capital, Redpoint Ventures, so a number of Silicon Valley stalwarts, as well as some from Wall Street.
So, Mike, how does this work? Are people basically getting an individual amount of insurance based on their account or based on what they want to have protected in their account, or is this more blanket coverage for all accounts in the pool?
Well, one of the nice things about this technology is that we can actually start to change the way you store it. It's different from any other asset class that we've seen before. So typically what we're focused on right now is deep cold storage. We segregate our customers' accounts into separate accounts for each of them. So we have a cap of $100 million of insurance, which is what this policy is, on that cold insurance. There hasn't been cold insurance like this before. This is underwritten by some of the Lloyd's of London syndicates, and it's the first of its kind. So there is a cap, but we separate everybody's accounts into separate wallets.
Mike, it's very difficult to understand exactly what's happened when it comes to Quadriga. Some calling foul play, some worried about, of course, the very sad fact of the matter that someone has passed away and taken the private keys with him. But would you help insure against theft, against hacking? Would Quadriga have been insured in your situation?
Well, it's a good question. Most people don't realize that this industry has grown so quickly in just the last few years, and many of the exchanges, when they started, there were no banks to count on, there were no trust companies, there was nobody like a Bitgo that you could go to. In the case of our accounts, this just never could have happened. You wouldn't even need insurance, because literally every account that we provision already takes into account having multiple account holders named with it. It's directly AML KYC programs to the corporation. So the idea that a single person had keys, we've just kind of designed that out of the system. So in this case, no, the insurance probably isn't relevant, because we've taken care of that for years already.